What's up, everybody? Hey, it is another edition of Everything Phoenix YouTube Live. So for those of you who are watching live, thank you for joining us. But we're dive right in, man. This is gonna be a good one. Why? Because we're talking politics. Just kidding. I had to fool that one. We are not talking politics because I don't want to make this guy upset or that person upset. It's not about that, guys. We are going to talk about how some of that is going to be related though to the housing. Which policies are better specifically for the housing market, and even more specifically Phoenix housing market. All right, so we're going to dive right into that here today on this edition of YouTube Live. And watching the replay, thank you for watching the replay, taking that. If you could comment below and let me know if you agree with what we're talking about today, that would be very, very helpful. Or if you're live watching this, where are you watching from? Put a chat. Let's have a conversation. Talk about any questions you have. If you're thinking somebody else probably is too. Guys, we have this election up in November. This presidential election you may have heard about between Donald Trump and Kamala Harris, and they both have different policies when it comes to just about everything. So we're going to talk about how that relates to the housing market here in Phoenix on this episode. Well, some other things with some development things and some things happening around Phoenix area, which are very important when it comes to jobs, the economy locally for Phoenix, and on and so forth. So I'm going to jump right in. We're going to share my screen, guys. Thank you for watching today, and don't be a stranger. Comment if you have a question. Here we go, guys. We're going to jump right into the whole election. There we go. This is the Cronford report. We're not going to just stick to just Cronford report, but this is the Cronford report, and we're about a couple things because the question remains. Okay, the question remains: in the presidential election year, is the incumbent or the new president, does the Republican or the Democrat matter when it comes to the Phoenix housing market, whether it's going to go up or down after the election is over? That's the question we're going to tackle here today. So let's jump right in. Back green. I'm going to make it a little bigger so you can read it. All right, here we go. Every election year, people ask if the presidential election has a significant effect on the housing market. The short answer is no. Now let's dive in a little further. There are always a few who loudly claim they are deferring any home purchase decision until they find out the result of the election, that part is true. These people are a tiny proportion of the total, insignificant in the overall context. In fact, if we examine the volume of the sales of the 5 months leading up to November election, we here we go. In 2024 through 2020, home sales were stronger than normal non-election years. In 2012 and 2016, sales were in line with normal years. In 2000 and 2008, home sales were weak than normal non-election years. So what does that mean? Notice that each line, one includes one Republican nominee and one for the Democratic nominee. So sales volume does not even seem to correlate to who wins. Now, it's interesting, right? The weaker years of 2008 correspond to recessions, which are more likely to cause weaker homes than elections. Here you go. The housing market is affected by life decisions and events. Couples deciding to live together, have children, separating, jump move, and the death in the family. Politics have much less impact politicians would have you believe. No, it's a funny one, right? The state of the economy and taxation rules will have a significant impact on the market, but predicting how the economy will behave and taxation changes might come into effect after the president's proposals have been heavily modified by Congress is hot with risk. Pundits will predict, but no one is at this forecasting, and results rarely match what is predicted. Unexpected events like epidemics have a more dramatic effect on the housing market. So the long answer is no. Right there. Okay, now I'll share a couple more screens here because let's talk about what happened after the last 8 presidential elections. Let's go with the 8 right here, guys. So I have on my screen here. Home prices went up after 7 of the last 8 presidential elections. Prices prices generally follow the trend of what's already happening in the market. They use rise even in election years. So you can see right now that in terms of like up, down, the Crawford report, what they did is they said, what is normal year around that time frame, and is it normal or about line, or is it abnormal? What this graph showing is simply, is it up or is it down year after a presidential election has occurred. And on 1 year, 2009, was that the case where the market was actually down the year after the election, not up. Okay, that's interesting. And then if you go to home sales, that was prices. Let's go to sales. Home sales went up after 9 of the 11 last presidential elections. 9/11. Right here in 1981, home sales went down at the election, and in 1989, home sales went down. Since then, every other presidential election, home sales across America have gone up. So the election does not have as big of impact as you probably would think. But let's do one more metric. Okay? Let's go to mortgage rates. That's a big topic in the news right now. Mortgage rate decreased leading up to 8 of the last 11 presidential elections. Okay? You can see right here that they actually decreased, which is good in the case of mortgage rates as opposed to home prices. They decreased in 8 of the last 11. The only time they did not was 80. They went up in 1992 and 2016. So guys, this is a pretty good indicator, pretty good information overall, if I will, about where the market's going to be after the president. Not necessarily up or down is indicating that, but indicating the fact that the election won't have near as much of an effect on the housing market the following year as one would believe. Okay, now policies of the candidates will make a difference. Okay, policies will make a difference, but if there are no radical or crazy policies that are going in effect after a certain candidate gets into office, then it's and this should happen. The odds are in your favor that the housing market and home sales in general will increase next year. But we'll see. Now, we do know certain things about some of the housing policies specifically with both of these candidates. Okay, we know that Kamala Harris has already proposed a $25,000 home tax credit to help the lower income people afford houses. The only problem with that is who's going to pay for it. That's my question with everything, right? Whenever any type of government official says, "Oh, this is throw out money and do this for this group of people," well, cool and all. Well, in concept, but who's going to pay for it? If you have to pay for it by taxing other people or printing money, then that could be inflationary at core. So that is not good right now. Where inflation is already not in good shape. Now, obviously not what it was 9% just several years ago, but it has come down. But still feels like price is high in most places for goods when you go to, especially grocery stores or any type of oil product based things, cars, and obviously houses are a lot expensive, and so on and so forth. So different policies that both candidates will have. One is more of, hey, take tax cut, let the capitalistic economy kind of take care of itself to a degree, and the other one is let's inject some certain things for certain groups of people and whatnot, and by injecting certain things to people, they will have more to spend in the economy or to do towards what I may do. So I'm not going to get into any more specific on that, because then it becomes a political show, and that's what this will never be. But it is important to understand the presidential elections. If you're waiting for that to occur, you probably shouldn't. Now, if you're just not ready to buy or sell how, then maybe that's totally fine, right? But if the election is the reason why you probably should not go ahead and do that, because the chances are that people are going to get off the fence after the election is over, because whether they be or they're upset, either way, they get a move because of what the Crawford just said. They said that the election doesn't have the greatest effect, not even close. What has effects are divorces, household formations, people having kids, death, and things of that nature. So those things are going to be inevitable no matter who is in office as a president or in Congress. So said, I'm a big fan, guys. You hear me say all the time, I like to zig when everyone else is zing. So this situation because right now, no one else is because they're all waiting for the election to occur. The majority of people, maybe you look at zagging right now if the time is right for your personal financial situation when buying or selling a house. Okay, that's my thing about the election up. Now, do have some other things coming up here with the Fed, and share my screen and talk about that. We have right here on Yahoo front and center. Rate cut is the start of a new Fed era. What comes next? Okay. The question now is how much deeper and faster the Fed will go. Now we already guys that let me show you so you guys see this. That we already know that the Federal Reserve has already said they're probably going to have 3 rate cuts towards the end of this year, or between now and the end of the year, I should say. Now, when it comes to 3 cuts, that doesn't mean it has to be 3 separate ones unless they're 25 basis points each. But the market is already kind of decided that the Fed will do this. And so they're already starting to price into marketplace a 75 basis points cut now in September here through December. Now, could that come all in one, or could it come in 2 or 3 different cuts? We don't know. Or maybe it won't happen at all, just because the market prices isn't going to happen by the end of the year. It's based on economic conditions and reports that come, jobs reports, PCE report, the CPI, and reports that come out over the next multiple times rest of the year here, 2024. But you can see in Yahoo Finance says a lot of this is about rate cuts. As a matter of fact, you have, speaking of Congress, you have right here, Democratic senator is calling to cut rates by 75 basis points. Now, obviously, if happened, then that would be because why? It would make people's housing more affordable. And who doesn't like more affordable housing? Like houses to be cheaper. So obviously, if you have a lot of properties already, you don't want them because you want your value to stay up. However, people in generally need more affordable housing. That is the how do you go about solving that problem? Now, obviously, if you bring the rates down, monthly payments are more affordable, and that will help. The problem is if you don't have inflation control, inflation will continue to rise. And guys, inflation is a hidden tax that you don't even know in the time that you're paying. Because if you bring it down too soon without getting inflation under control, then those same dollars that you're going to be thinking you're saving, you're just simply spending more because your dollars worth less, and so you don't get anywhere, even though you feel like you have because your rate instead of 0.25% is now 5.5%. But really, it didn't get you anywhere because dollars worth less. So we got to get inflation under control first, and that's the job that the Fed is back and forth on. So go back to Yahoo Finance. We have an article right here that again talks about Gary Conan. Conan says Fed cuts already be priced into the mortgage market. A lot of people are saying that guys, lower mortgage rates attracting more home buyers. There's articles on what's going on now with the affordability and what rates should hopefully be doing here in the near future. So that is the topic at hand right now. Now, if you look at where we currently are, 30-year fixed, guys, look at this, 6.2%. That is pretty. That is nice. Now let's be very clear here. You guys know that 6.12% doesn't mean that if you just go buy a house, get a loan tomorrow, you're paying 6.12%. You might have a rate low. Matter of fact, if you are going to pay some sort of discount up front, you have your option of doing with your mortgage loaner, that maybe your rate could be in the 5s right now. That is true. We had several buyers lock rates in the 5s last week because they were paying some amount of discount point, a half point or full of a discount point to the lender up front that gave them a 5.75% rate on the 3-year, guys. 5s are here. The word out. Let's help get the word more that the 5% interest rates are here. And if you go online to a lot of these webs like this that show what the rates are, that may not be the full picture. Contact us 480-660-5997, and we can put you in touch with our preferred mortgage lender to make sure you get the full information for a specific situation, because that's all that matters at the end of the day. Okay. Now I'm going to share my screen. Go back here. Let's talk about this article. Gary Conan. Okay, this guy is that Federal Reserve expected rates this week won't provide much relief for home buyers. High borrowing costs. Okay, because already priced into the market. So he says, I do not see a major impact to the mortgage market or credit card financing or anything else, but it's starting to drop rates this week. So again, that's the crux of the situation. If the market starts pricing it into it, which they clearly have, guys, because the rates are at 6.12%. Now the Fed hasn't cut rates once yet. So if they have cut rates and had a huge impact at the time they spoke and cut rates, you just saw a big drop. You saw this drop over time over the past several weeks coming down because the market is anticipating the Fed already going to cut rates. So there may not be a big bump when in fact they do announce a rate cut here in actually this week, right? When they meet. So that's the big news this week. However, nonetheless. Now let's go back to the Cron report here, okay? Because I show you where the Cron report stands today. 97% on the CIs. Again, it was 98 last week. It's trending down. If you're a buyer, I would be licking my chops because I'm not sure how longer this trend is going to be going like this. It's ever so slowly and never so subtle. But at some point, it could revert, especially as we get into the cooler months where weather cools down and more people start turning their attention to Phoenix real estate because it's to be in the winter time and even the fall potentially. So 97.7 is what we're right currently today. And let's go back to this article because let's show you this, guys. I thought this was intriguing. Okay. This is a city ranking table, which lists the largest 40 cities in central Arizona by their annual average price per square foot. Now we use the annual average, not the median average, because it's more accurate. You have the average median price, average price per square foot. Excuse me, not the average price per square foot. And here you go, guys. If you ever want to live in Paradise Valley, it's getting more and more expensive. Look at this. This $66 a foot on average over the past months in Paradise Valley to buy a house or any type of to buy in Paradise Valley. Scottsdale $510, still very strong number at $510 a square foot. Carefree $460, Fountain Hill $396, Rio Verde $388, Cave Creek $379, and Phoenix comes in at $317. Guys, the one thing about all of these areas from 6 on to number 1 is that all are for the most part in the Northeast Valley quadrant section of the entire greater Phoenix area. So the most expensive real estate is going to be Northeast Valley. If you look up the greater Phoenix area in the 4 quadrant, the Northeast is where most expensive real estate is going to be. Then you come out here, you can see it gets a lot more affordable. Even Chandler, as expensive as it's gotten over the past couple of years, especially, it's still only on average $291 a square foot to live there. That's still pretty good. Gilbert down here too as well at $289, right? Chandler number 12, and number 13 at $280. Mesa and East Valley coming in at $270. So you can see the East Valley is very much right around the same pricing overall. Okay. Now you go into the north or the southwest valley. You're down here at number 30, 32, right? Avondale at 219, Tellison at 217, Buckeye at 225. You have Goodyear at 237, which is coming in number 25 right here. Okay. El Mirage and Surprise in the Northeast Valley at 234 and 233 respectively. See, good idea, guys. And look across the board. There's only 2 on here. Three cities on here in Arizona over the last 12 months actually down on the average price per square. You have Tonopah, which is out there, way out there in the Wesley, and then you have City and Coolidge, which both are on the far outskirts of the greater Phoenix area. One could argue they're really not even part of the greater area, but they're close, so they're included in this graph. All right, okay. That I thought that was interesting. You have a good idea what just to say I want to buy a house for 2,000 square feet. Let's do the math times the price per square foot. That's about what I'm looking if I want to move to that city. Okay? Very interesting. All right, so now let's just jump to a couple more things that have to do with residential real estate. Okay, half of American households can consider a cost burden. Again, we have this affordability issue. Okay, this article goes on to talk about things, and this is the most important part of this article. In my opinion, there's a lot of parts. This is interesting. Last year was the first time in a decade the real median gross cost renting, which includes rent and the average monthly cost of utilities and fuels, adjusted for inflation, grew faster than the real home value. This time in a decade, up 3.8% compared to 1% according to the census data, guys. What this means is that everyone's saying, "Oh my goodness, to buy a house and to own property, it's so unaffordable. There's an affordability crisis." Yeah, I'm not saying there's not, but if you think the solution is just go forever, according to that article, that's not probably going to be the case. Again, first time in a decade that rental mean gross cost of living went up 3.8%, whereas housing, if you owned a property, went up 1.8%. So it's more expensive now to rent, given all the costs that it incurs. So that is interesting. Okay, talks about certain states where most, and guys, there's yours truly, right here. Arizona, Florida, and Georgia. Some most significant increases of share of rental households income going towards rent. Because see, guys, at the end of the day, what this is really hitting is that 30% right here, 21, excuse me, not 21.1 million renters spend 30% or more of their income on housing costs last year. That volume represents 49.7% of the 42 million rental households in the United States, guys. That is a lot. Guys, understand what that says. Half of all renters in America, half are actually spending 30% or more of their income just to pay rent. That is not good. That is a lot. Okay, and we hopefully have solutions in the future to get that to reverse and change. All right. Now, going back to my screen here. Okay. Let's go to the next article. It talks about America's most competitive markets in 2024. Where does Phoenix rank? Are they in the top 10? We shall see. Here we go. Phoenix no longer, I should say, nowhere to be found in top 10. Now, this is a good thing. Why? Because this is talking about the nature of when you apply for a job, how many applicants going to be as well applying for that same job. Phoenix is not in the top 10. This is good. Why? I think it's because Phoenix right now is creating so many jobs that even with the influx of population migration, that we still have plenty of jobs to go around for most people that are in the market looking for a nice job. Okay. In fact, I think it talks about a lot of it here. At some point down here, right? Well, it talks about how the highest occupations, highest paying occupations. Physician makes sense. Psychiatrist number 2. I had no idea. Wow. Neurologist number 3. Psychiatrist number 2 above neurologist. Wow. That is a high paying job. Okay. But you can see right here that Phoenix is providing so many good paying jobs. The situation, they're not in the top 10. A good thing in my opinion in that scenario. Now, next article, my view. This guy's name. Arizona needs more housing. Yes, duh. We need that. Adopting these policies get us there. So this is this person's opinion on what we need to do to see affordable housing crisis in Arizona today. Okay, here we go. Since 2000, Arizona has welcomed 2.4 million new residents in Arizona. That's crazy, right? Productions getting that up to 4.5 million more by 2006. Housing construction has not pace. The result is a significant supply shortage that has contributed to houses increasing 57% from April 2023, reaching a median of $423,400. Renters have not been spared either with rents climbing 72%, 7% for rents, and a 57% for home buyers. Okay. Since 2010, these trends have led to a troubling rise in house cost burdens, with nearly half of all struggling to afford their homes. This is crazy, okay? This is a huge. Now, obviously, if you own, congratulations, you had a ton of equity you just made since years. Okay, that's really good for that. Okay, time to streamline building permitting processes. This is what we're going to talk about. So they think that by allowing more homeowners to build accessory dwelling units, showcase other policy levers that can help. Okay, so that's going to help potentially with more affordable housing. All flexibility in zoning laws allow for higher density housing in strategic locations such as near transit hubs and job centers is essential. Not a bad idea. Fostering a collaboration between the business community and government agencies can lead to financing models for affordable housing projects. I agree, guys. The key is you have the private sector involved. You have to. Government will screw it up by themselves. Okay. Now this is interesting. Implementing eviction prevention programs is vital to protect renters from displacement. Evictions in Arizona reached 97,000 filings in 2023, the high level since 2010. Now, to be careful on that though, because otherwise you're going to people who want to invest, you're going to disincentivize to actually buy invest properties to provide that housing to people who want to rent. So there's a fine line there, and if you have programs to help cover someone who's behind rent, that's one thing. If you put in legislation to make it harder and longer for a landlord to evict that tenant, that I think would be detrimental to the local economy, because then people won't buy investment properties to provide housing to people who are looking for it. So hopefully they won't do that. That's not what they're saying in this article. They're saying it looks like they're looking for more ways to funds for people who get behind their rent at a hard snag in life. So that is going to be different. So that's interesting. And by the way, as a landlord myself, I have run into this. I run into this where I've had tenants fall behind because of true legit hardships they are facing, loss of job, or other personal issues. A lot of time medical or health related. These programs have been able to step in to give them a month or two rent for free, right? Subsidize the rent for a couple months, in which I got paid as landlord because scenario. So that is good to have those type of programs there for people who truly are in need. Okay, so let's go back to the screen. Let's talk about a few more things, and then we are out of here, guys. Formation Brewing enters Phoenix market with growth in mind, guys. A new brewery in downtown Phoenix, which is awesome. So check it out. Formation Brewing, new tap room restaurant is under construction at Street in downtown Phoenix. So that's good. That's on its way. Arizona's minimum wage for another increase in 2025. Arizona restaurant workers and other paid minimum wage will be getting a bump in January 25, thanks to the latest inflation report. So inflation now is increasing that pay, which are good to keep up with inflation, but unfortunately, you're just trading dollars. Because as long as inflation continues to rise, you're going to keep raising the minimum wage. As long as you keep raising the minimum wage, probably going to keep having inflation. It's this vicious cycle that somebody has to get us out of at some point. Okay, so that is the decision there. And then Mam Homes buys land near Tucson new community. That's another big builder that bought a huge parcel, 20 acres of land to build more single-family homes. And then Tokyo-backed Phoenix firm shells out $250 million for Florida construction companies. So now we have a Scottsdale for Toyo Finance has acquired another construction company. So we have some things going on there. We have a lot of foreign investment starting to take place out just Canada. But we love Canada. Thank you for in our city. And the multi-billion-dollar Semiconductor Project proposed in Peoria. Guys, you're saying, wait, hold on, another Semiconductor Project? Yeah, I know. Trust me. You have $65 billion project with TSMC. You have Intel headquarters, and now you have another semiconductor manufacturing is being proposed in Arizona in Peoria, which is the northwest suburb of Phoenix. So this is interesting. The company's proposed a 600,000 square foot factory that would create as many as 1,500 jobs in the city of Peoria, guys. This is huge. And have an estimated $0.66 billion economic output in the Phoenix region, and also create 4,500 new construction jobs. Wow, this is crazy. And they will supply TSMC manufacturing plant. This will be up in the same neck of the woods to an extent, and not right next to them, but in the same neck of the woods. Okay, so guys, a lot of big things happening in the semiconductor space here in Phoenix. Okay. And last but not least, how can we end in a session everything Phoenix without talking about Pickle Ball? I played last night. Whew, a little sore day. Not gonna lie, a little sore. Love pickleball. Played last night. It was a blast as always. It's pure pickleball and paddle. We'll also have home to the AZ Drive of Major League Pickleball, guys. So this is going to be a phenomenal venue, and it's going to be 886,000 square foot pickleball facility near Scottsdale, and the Arizona Boardwalk area where the Top Golf is and the aquarium, and it's going to be just a phenomenal place to have an entertainment district for pickleball, guys. So can't wait for that. You got the Reverb Hard Rock Hotel coming there, Scottsdale. Oh my God, guys, it's gonna be awesome in that little area. So, guys, I hope you enjoyed our we're out now. I'm going to be respectful of your time. I hope you enjoyed our little YouTube live here today, talking about which politician and their policies might be best for the Phoenix area. But really, what we're answering is the question: will, no matter who's elected, will they have a huge impact in the housing economy or housing market in America the subsequent following year? And again, if history repeats itself, the answer is probably not a whole lot will change in terms of them or whoever gets in office. It's going to be business as usual. You're going to have probably a lot of men come off the fence, especially in Phoenix, because the weather will be nice in the Q1 of 2025. And honestly, a lot of people have waited because of the election who will jump into the pool in 2025, and the economy will then hopefully get a jolt of energy, and therefore be hopefully built up and in good hands. So we'll see. The time will tell, but we're hoping for the best, preparing the worst, right, guys. And you should be too by watching channels like this and getting all the information so you're fully informed and educated on Phoenix, guys. Phoenix, keep it class. Until next time, we'll see you next Monday.